If there is one theme that is bound to do well in India, then it is consumption. We are a country with more than 140 crore people, where salaries are rising and people are spending more and more money. And within consumption, one of the biggest trends is premiumization. Today, more and more people are preferring branded good quality products and services. And this would directly benefit companies that cater to the premium segment. Hey everyone, my name is Sahil and this is my Personal Finance Academy. Recently, Goldman Sachs has come up with a very interesting report titled The Rise of Affluent India. I had a look at the report and found it very interesting. Hence, I thought of sharing with you all. This report is centered around the rapid growth of affluent Indian consumers that currently represent only 4% of the total Indian population. And this affluent consumer population is expected to grow at 13% CAGR for the next few years. This segment would directly benefit companies that cater to areas like leisure, jewelry, premium brands, out-of-home, food and travel, healthcare, and so on. Based on the insights, Goldman Sachs has identified the list of potential stocks that would benefit from this trend of growing affluent Indians. Out of the list of stocks, Goldman has also provided its own recommendation. So in this video, we'll decode this report by first analyzing the key reason behind the rise of affluent Indian population, and then we'll look at the sectors and stocks that would benefit from this theme. But before that, please note that it is not a buy or sell call. The idea is to share my knowledge with you all and give you the direction so that you can do further research and identify the right investment opportunities. Alright, let's get started. Let us first start by understanding how do you define affluent Indian. So as per Goldman, a person with an annual income of around $10,000 or above falls into the affluent Indian category. That's roughly around 8 lakh a year. So if your annual salary is 8 lakh or more, you fall into the top 4% of working population in India as compared to the India's average per capita income of just about $2,100. So as per research, there are around 60 million affluent Indians as of today that have grown at 12.6% CAGR rate between FY19 to 23. Assuming similar growth rate, the total affluent Indian population would touch 100 million mark by 2027 versus the overall population growth of India, which is just about 1%. Now, some of the key factors driving this growth in affluent Indian population include better job opportunities along with rising income level and increasing value of three asset classes: equity, gold and property. Indian equity market has more than doubled since 2019 and retail ownership has also increased in Indian equity. Moreover, Indian households own around 10% of global physical gold that has appreciated sharply in last 4 years. Property prices have jumped about 30% between FY19 to 23. And this affluent growth is also visible in various segments. For example, in passenger vehicle, SUV has grown at much faster rate as compared to entry-level cars. Then in two-wheeler, Eicher Motor has grown much faster rate than industry. In fashion, Trent has grown at much faster rate than V-Mart. In FMCG, Nestle has grown at much faster rate than HUL. In fact, within companies, their premium segment has grown faster. HUL premium portfolio has grown 2 times as compared to the overall revenue growth. So based on the finding, the research team compared the per capita income of top affluent Indian, which is about $10,000, with other economies like China and Brazil that have similar per capita income to understand which sector in China and Brazil have outperformed. And the data suggests that the per capita consumption in leisure, hotel, recreation, out-of-home food is around 18 to 20 times that of India, compared to the overall consumption, which is just about 2 to 3 times that of India. They also looked at the consumption pattern of top 10% of urban Indian, and the largest gap in per capita consumption for the top 10% of urban India compared to the average per capita consumption of India is in your durable goods, healthcare service, jewelry, out-of-home food, which is about 8 to 10 times of average India. Based on this, Goldman team has identified 12 categories that can benefit from affluent Indian trend. First is travel. There is already a big trend of travel in India, especially for international travel, as well as mid to high-end hotels. In this, company has identified 2 names: Interglobe Aviation, parent company of Indigo Airlines, which is an undisputed leader in Indian airline industry with around 65% market share. Second name is Make My Trip. Although it is not listed in India, it is listed in US market. Then second category is leisure. Rising income also result in more responsibilities and hectic work life. That's where Indians are now increasingly spending a larger chunk of their money in leisure activities. This is something that I can personally relate to. I have no interest in material possessions like fancy watches, fancy clothes, luxury cars, etc. But there is one area where I love to spend money, and that is leisure activity. Visiting a good property and unwinding myself. That's where Goldman team has identified 2 companies in this space: Indian Hotel and Lemon Tree. Indian Hotel is the parent company of Taj Group of Hotels and part of Tata Group. It basically caters to the ultra luxury segment. Lemon Tree on the other side caters to economy, mid-premium to premium segment with brands like Aurica, Lemon Tree and Keys. I've already discussed Indian hotel industry and Lemon Tree in detail. Then third category is healthcare. Of late, Indian healthcare industry has emerged as one of the fastest growing industry, and there are multiple growth drivers. One of the important driver is increasing penetration of health insurance that gives a financial comfort to opt for the best healthcare services. Moreover, there are increasing lifestyle problems that again require healthcare service. Then another big factor is the role of technology that is transforming the Indian healthcare ecosystem. Then another big trend is medical tourism. As per data, nearly 2 million people are visiting India and have spent around $9 billion in 2022 across medical, wellness and IVF treatment. With rising cost of healthcare in the West and availability of world-class healthcare facility in India at much lower cost, this medical tourism is going to grow big time. So Goldman has identified 4 companies in this sector: Apollo Hospital, Max Healthcare, Medanta and Fortis. Among this, Medanta is not yet listed on Indian stock market, rest all are listed companies. Then fourth category is jewelry. Now the jewelry segment in India has been highly fragmented with small mom and pop stores across cities and towns. However, now organized players are expanding their presence. They started with metro cities and now expanding in tier 2 and 3 cities. Personally, I experienced this in my hometown. A few years ago, there were hardly any organized retail jewelry stores, but now we have all the top jewelry brands. Interestingly, around 65% of Indian jewelry market is still unorganized. So there is a lot of growth potential. That's where the Goldman team has identified 2 stocks. First is Titan, which is parent company of Tanishq, as well as Carrot Lane and Mia that caters to different audience within jewelry segment. Moreover, Titan is also into your watches with brands like Sonata, Titan, and has also forayed into your digital watches. Apart from this, it is also into your eyewear segment with brands like Titan Eye Plus, then perfume with brand Skin, and newly added brand for sari, which is Taneria. Second company is Kalyan Jeweler that caters to different segment within jewelry, including wedding segment, aspirational jewelry, staple regional jewelry, and women's workwear. Then fifth category is out of home food. There is no doubt that today the salaries are rising and people are getting prosperous, but that comes with a cost of having less time, especially in metro cities where there is already a lot of time spent in travel, and that's where there's a growing trend for eating out. Moreover, people also like to socialize at cafes and restaurants more frequently. That has significantly boosted the demand for eating out. Another factor is increasing preference for fast food among youth. Personally, I have seen that out of home is a huge market in the West and the eating out culture is now growing quickly in India as well. So Goldman team has identified 5 stocks in this segment. 4 are from QSR segment where Jubilant Foodwork, which is parent company of Domino's India, Devyani parent company of KFC and Pizza Hut in India. Next, Sapphire, which is also parent company of KFC and Pizza Hut in India. So basically both Devyani and Sapphire own the franchisee of Yum Food, which is the parent company of KFC Pizza Hut globally. And fourth is Westlife, which is the parent company of McD in India. I've already done a detailed video on potential of Indian QSR market. And fifth stock is Zomato, which is a leader in Indian online food delivery market with around 55% market share. Sixth category is packaged food. Again, a huge industry in the West, but now picking up in India as well. I still remember earlier we used to get fresh wheat flour from the mill and all essential food items from the market without any packaging. But now everything is packaged right from wheat flour to rice to lentils and the list goes on. Especially there's a huge growth in ready to cook food due to lack of time. Moreover, within this segment, one subcategory is growing at a very fast rate and that is healthier food alternative across snacks as well as proper meal. So overall, packaged food category is bound to do well in India and Goldman has identified 2 companies in this space, Nestle and Tata Consumer. Nestle is a leading player in packaged food segment that include brands like Nescafe Coffee, Nestle X cereals, then chocolate like Kit Kat, Munch, then range of dairy products like Everyday, which is powdered milk, then it offers curd, Milkmaid, then flavored milk and so on, and of course an undisputed leader in noodles category with brand Maggi. And now it has also forayed into various other segments like ketchup, pasta and so on under the same brand. Nestle is also a leader in baby food category in India with brands like Cerelac, Lactogro, Nangro, and being a father myself, I can vouch that almost every parent would use Nestle product for their kids. It's sheer dominance. Then second company is Tata Consumer. Again, company offers various brands across categories that include Tata Salt, Tata Tea, Himalaya Water, Tata Sampann, then a range of healthier products under the brand name Tata Soulful. In outdoor, Tata has set up a venture with Starbucks India with 50-50 partnership. Then seventh category is premium retail, that basically include the malls. And we all know how the trend has shifted from small mom and pop stores to mall all over the country. Within this segment, Goldman pick is Phoenix Mill, the parent company of Phoenix Mall in India that has a strong presence in top cities of India like Mumbai, Bangalore, Chennai, Pune, Ahmedabad and so on. Then eighth category is premium two-wheeler segment. Over the time, the demand for premium bike has increased significantly thanks to the aspirational young generation of India. And when it comes to top premium two-wheeler category in India, there's no competition to Royal Enfield. It has a cult following. I've seen many people aspire to own a Royal Enfield bike right after their first job. And Goldman team has picked Eicher Motor as its preferred company, which is the parent company of Royal Enfield. Company is consistently launching new products in 350cc segment and maintained an aspirational brand status. Moreover, there is a lower risk of electrification in premium motorcycling. Probably because people like Royal Enfield because of the feel, and you can't get that feel with electric bikes. Then ninth category is premium cars. Of late, there's a huge surge in demand for SUV vehicle as compared to entry-level cars. Again, same logic. Car is an aspirational product in India. And that's where Goldman team has identified Mahindra & Mahindra as their preferred pick, which is leading the SUV market of India with brands like Thar that again has a cult following. Then XUV 700 and Scorpio that are equally creating a lot of buzz and getting huge response. Apart from this, Mahindra & Mahindra also offers premium bikes under the brand name Java, and its tractors dominate the Indian market with 40% market share. The interesting part is that company is ready to launch a range of electric vehicles, and they have already launched XUV 400 electric, then electric auto, and will launch many more electric vehicles in the near future. 10th category is premium beauty. Again, a very promising segment as there's a big trend of premiumization in Indian beauty segment. Personally, I've observed that the beauty segment is a huge business in the West, and in India it has just scratched the surface. Thanks to Instagram and the beauty influencers, every girl aspires to look great and doesn't mind spending a premium on beauty products. That's where Goldman has picked up Nykaa, which is the leading player in Indian beauty segment, and second pick is Honasa, the parent company of Mamaearth. The recently launched IPO that gathered a lot of controversy around its valuation. Then 11th category is premium fashion. Similar to premium beauty, there's a growing trend for premium fashion. Again, a lot of credit goes to Instagram influencers. Moreover, there is a new concept of fast fashion that has already made a big revolution in the West and now in India as well. So in this category, Goldman preferred Trent as the first name. Now I've already discussed Trent business in detail. It's parent company of Zudio, Westside and a joint venture with Zara India where Trent has 49% stake. Among these, Zudio is the fastest growing segment. Then second pick is Vedant, the parent company of Maneuver. And third pick is Page Industry, parent company of Jockey. Now final 12th category is premium real estate. Due to growing affluent Indians, the demand for premium real estate is growing rapidly. Just a Google search would reveal many premium properties worth 4 to 5 crore rupees getting sold within a few days. This is just crazy. So in this segment, Goldman team has identified 3 companies. Oberoi Realty, a leading premium real estate company based out of Mumbai. DLF, which is largest real estate player in Delhi NCR region, and Prestige State, a leading real estate player in Bangalore region and now expanding in various cities like Mumbai, Chennai, Hyderabad, Goa and so on. Among all these companies, Goldman has shortlisted 9 companies. That is your Titan, Apollo Hospital, Make My Trip, Eicher Motor, Zomato, Devyani Food, Sapphire Food and Phoenix Meal. In fact, there are a few companies from this list that I also own in my portfolio. If you want to explore that, you can visit my website where there's a section called Weekly Series where I post one exclusive video. You can explore that. I would love to know which companies do you find very promising and which companies you hold in your portfolio. Now, before we close this video, let's look at the key risk in the growth thesis. So first risk is rise of competition. The high growth in categories which address the top end of income pyramid in India will naturally attract competition from new entrants, including international brands, and also from existing companies. This can hurt the incumbents' market share and can lower their profit pool of category if there is aggressive price-led competition. For example, premium beauty is seeing many new brands scale up and restaurants are seeing many new brands expanding. So the incumbents will have to have strong competitive advantage to be able to hold their market share and pricing power in these segments. Then second risk is correction in asset prices could impact the wealth effect. The wealth effect from sharp increase in stock market and gold can reverse if there's a substantial correction in asset prices. This can impact the positive sentiments, and affluent consumer could also slow down the rate of consumption growth. And third risk is significant change in government policies on taxation could hurt purchasing power. There could be a risk to disposable income growth for affluent consumers if the government significantly raises income tax rate for upper income consumer. As only 6.5% of Indian working age consumer pay income tax, the impact of tax increase will largely be on upper income consumption. So in this video, we discussed the report on Rise of Affluent India by Goldman Sachs, where we covered various factors that have contributed in the rise. This affluent Indian population is going to grow at 13% CAGR rate to touch 100 million mark by 2027, creating immense growth opportunity in consumption space that caters to the affluent Indian segment. We also looked at 12 categories that include travel, where top picks are Make My Trip and Interglobe Aviation, then leisure that include Indian Hotel and Lemon Tree. Next is healthcare that include Apollo, Max Healthcare, Medant and Fortis. Then fourth is jewelry that include Titan and Kalyan Jeweler. Fifth is out-of-home food that includes Zomato, Jubilant, Devyani, Sapphire and Westlife. Sixth is packaged food that include Nestle and Tata Consumer. Seventh is premium retail where stock is Phoenix Mill. Eighth is premium two-wheeler where stock is Eicher Motor. Next is premium car where stock pick is Mahindra and Mahindra. 10th is premium beauty where stock picks are Nykaa and Honasa. 11th category is premium fashion that include Trent, Vedant Fashion and Page Industry. And final 12th category is premium real estate that include Oberoi Realty, DLF and Prestige State. So this is it for this video. I hope you'll find this video useful. If you want a detailed analysis on any of the companies, just let me know in the comments. I'll see you next video. Till then, take care.